Do you know the difference between SMH ETF and semiconductor stocks? Hey everyone, welcome back to Chat ETF. Today we're diving into the world of tiny circuits and big tech with the SMH ETF. Ever wondered what makes your phone tick? Well, a big part of it is semiconductors, the tiny chips that power all our devices. And the SMH ETF offers a way to invest in the companies that make them. But is the SMH ETF all it's cracked up to be? Are there hidden costs? Should you ditch it for individual stocks? We'll explore all that and more, so buckle up. Question 1. What is SMH ETF? SMH, ticker symbol for the VanEck Semiconductor ETF, offers investors a pathway to gain exposure to the semiconductor industry through a single investment. Let's delve deeper into what SMH is and how it works. Understanding the basics. Type of investment: SMH is an exchange-traded fund, ETF. ETFs are like baskets containing multiple stocks that trade on a stock exchange, just like a single company's stock. Investment objective: SMH aims to track the performance of an index, specifically the MVIS US Listed Semiconductor 25 Index, or MVIS US Listed Semiconductor 10% Capped ESG Index in some regions. This index represents a group of 25 companies listed on U.S. exchanges and involved in semiconductor production and equipment. Benefits of investing in SMH. Diversification: by owning SMH, you gain exposure to a variety of companies in the semiconductor industry, reducing your risk compared to picking individual stocks. Industry growth potential: semiconductors are critical components in electronics, and the industry is expected to experience continued growth due to increasing demand for technology. Convenience: SMH allows you to invest in the sector with a single purchase, eliminating the need to research and choose individual companies. Question 2. What is the SMH ETF's primary investment objective? The primary investment objective of the SMH ETF is to track the performance of a specific index that focuses on companies in the semiconductor industry. Here's a breakdown of this objective. Tracks an index. Unlike some ETFs that may have actively managed holdings, SMH is passively managed. This means it doesn't aim to outperform the market by picking individual stocks. Instead, it tries to mirror the performance of a predetermined index. Specific index: the target index for SMH is either the MVIS US Listed Semiconductor 25 Index, depending on the region, or the MVIS US Listed Semiconductor 10% Capped ESG Index. Both focus on companies listed on U.S. exchanges and involved in the semiconductor sector, but with a slight difference. MVIS US Listed Semiconductor 25 Index. This standard version tracks the performance of the 25 largest and most liquid, easily tradable, U.S. listed companies in the semiconductor industry. MVIS US Listed Semiconductor 10% Capped ESG Index. In some regions, this version incorporates environmental, social, and governance (ESG) factors into its selection process. It still focuses on the semiconductor industry but aims to choose companies that meet certain ESG criteria while capping the weight of any single company in the index at 10%. This helps diversify the holdings and potentially reduces exposure to any one company's impact. In essence, by investing in SMH, your goal is not to outperform the market through individual stock selection, but rather to align your investment with the overall performance of the semiconductor industry as represented by the chosen index. Question 3. Does the SMH ETF track a specific index? Yes, the SMH ETF absolutely tracks a specific index. In fact, this is a core function of how the ETF operates. Here's a detailed explanation. Passive management: unlike actively managed funds that pick and choose individual stocks, SMH follows a passive management strategy. This means it doesn't try to outperform the market through stock selection. Index benchmark. To achieve its objective, SMH relies on a specific index as a benchmark. This index serves as a blueprint, dictating the composition and weighting of the companies held within the ETF. Target index. The specific index SMH tracks depends on the region where it's offered. There are two main possibilities. MVIS US listed Semiconductor 25 Index. This standard version is the most common benchmark. It tracks the performance of the 25 largest and most liquid, easily tradable, US listed companies in the semiconductor industry. MVIS US listed Semiconductor 10% capped ESG Index. This version is offered in some regions and incorporates environmental, social, and governance (ESG) factors. It still focuses on the semiconductor industry, but with a twist. Companies are chosen based on both their involvement in semiconductors and their adherence to ESG criteria. The weight of any single company in the index is capped at 10%. This helps diversify the holdings and potentially reduces exposure to any one company's impact. Question 4. Does the SMH ETF employ any quantitative investment strategies? The SMH ETF itself likely doesn't directly employ quantitative investment strategies. Here's why. Passive management. SMH follows a passive management approach, meaning it doesn't actively pick and choose stocks based on complex algorithms or quantitative analysis. Index replication. Its primary function is to replicate the performance of a target index, MVIS US listed Semiconductor 25 Index or MVIS US listed Semiconductor 10% capped ESG Index. The index selection and weighting are predetermined by the index provider, MVIS. However, there's a connection to quantitative strategies. Index construction. The target indexes SMH tracks, MVIS US listed semiconductor indices, might be constructed using quantitative methods. These methods could involve factors like market capitalization, liquidity, and financial ratios to identify the 25 largest and most relevant companies in the semiconductor space, standard index, or incorporate ESG criteria on top of those factors, ESG version. Question 5. How frequently does the SMH ETF rebalance its portfolio? The exact frequency of the SMH ETF's rebalancing isn't publicly available information. However, we can discuss the general timeframe for rebalancing in passively managed ETFs like SMH and some factors that might trigger a rebalance. Understanding rebalancing in passive ETFs. Index tracking. Since SMH tracks a target index, MVIS US listed Semiconductor 25 Index or MVIS US listed Semiconductor 10% capped ESG Index, its portfolio composition should ideally mirror the index. Market fluctuations. Over time, natural market movements can cause the holdings within the index, and consequently, the ETF, to drift away from their target weights. For instance, if a company in the index experiences a significant stock price increase, its weight in the overall index will grow larger than intended. Rebalancing to maintain alignment. Periodic adjustments. To maintain close alignment with the target index, SMH periodically rebalances its portfolio. This process involves buying or selling holdings to bring their weights back in line with the index. No set schedule. There isn't a publicly available, fixed schedule for SMH rebalancing. The frequency likely depends on how significantly the holdings deviate from their target weights within the index. Possible triggers for rebalancing. Significant price movements. If a company's stock price within the SMH portfolio fluctuates significantly, causing its weight to drift considerably from the target index weighting, a rebalance might be triggered. Index rebalancing. the underlying index, MVIS US-listed semiconductor indices, itself might rebalance periodically. When this happens, SMH would likely need to follow suit to maintain alignment. Impact of rebalancing. Transaction costs. Rebalancing involves buying and selling securities, which can incur transaction costs for the ETF. These costs are ultimately reflected in the ETF's expense ratio. Tax implications. Depending on the specific holdings being bought or sold during rebalancing, there could be tax implications for the ETF, which might indirectly impact shareholders. Investor takeaway. While the exact rebalancing frequency for SMH is unknown, it likely happens periodically to maintain alignment with the target index. Significant price movements within the holdings or rebalancing of the underlying index itself are potential triggers. The focus for investors should be on the long-term tracking objective of the ETF, understanding that rebalancing is a natural process to maintain that alignment. Question 6. How has the SMH ETF performed in different market conditions? The SMH ETF, heavily invested in the semiconductor industry, exhibits performance characteristics that are sensitive to different market conditions. Here's a breakdown of how SMH might behave in various scenarios. Bull market. Potential for strong gains. During bull markets, characterized by broad economic expansion and rising stock prices, the SMH ETF has the potential to deliver significant returns. This is because the semiconductor industry is often a key driver of technological advancements, and its products are in high demand during periods of economic growth. Companies within the SMH portfolio could experience increased sales, profitability, and stock price appreciation, leading to strong overall ETF performance. Bear market. Heightened vulnerability. In bear markets, where stock prices generally decline, the SMH ETF might be more vulnerable than the broader market. The cyclical nature of the semiconductor industry can lead to amplified downturns during economic slowdowns. Reduced consumer spending on electronics and lower business investment in technology can negatively impact semiconductor companies' sales and stock prices, potentially causing the SMH ETF to experience steeper losses compared to a more diversified holding. Volatile markets. Increased fluctuation. Volatile markets, characterized by rapid swings in stock prices, can cause the SMH ETF to experience higher than usual price fluctuations. The semiconductor industry can be sensitive to news events and economic data releases that impact investor sentiment. This can lead to more pronounced price movements in both directions for the ETF, compared to periods of relative stability. Sector-specific events. Outperformance or underperformance. The SMH ETF's performance can be significantly influenced by events specific to the semiconductor industry. For example, a major technological breakthrough or a shortage of critical materials could lead to outperformance for the ETF. Conversely, trade wars, geopolitical tensions disrupting supply chains, or manufacturing issues could cause the ETF to underperform. Question 7. What are the key risks associated with the SMH ETF's investment strategy? The SMH ETF's investment strategy, focused on the semiconductor industry, comes with inherent risks that investors should be aware of before investing. Here's a breakdown of the key risks. Sector concentration. Limited diversification. Since SMH focuses on a single industry, semiconductors, it lacks the diversification benefits of a broader ETF that invests across multiple sectors. This concentration amplifies the impact of industry-specific events on the ETF's performance. A downturn in the semiconductor industry can lead to significant losses for the ETF, even if the overall stock market performs well. Economic sensitivity. Cyclical industry. The semiconductor industry is cyclical, meaning its performance is closely tied to the broader economic climate. During economic expansions, demand for electronics and technological advancements typically rises, benefiting semiconductor companies. However, during economic slowdowns, demand can plummet, leading to lower sales and profitability for companies within the SMH portfolio. This cyclical nature translates to increased volatility for the ETF's price. Technological disruption. Rapid innovation. The semiconductor industry is characterized by rapid innovation. New technologies and manufacturing processes can quickly become obsolete. Companies within the SMH portfolio that fail to adapt to these advancements could experience significant losses, impacting the ETF's overall performance. Geopolitical risks. Supply chain dependence. The semiconductor industry is geographically concentrated, with a significant portion of manufacturing located in certain regions. Trade wars, geopolitical tensions, or disruptions in these regions can disrupt supply chains, causing shortages and price increases for semiconductors. This can negatively impact companies within the SMH portfolio and lead to ETF price declines. Additional risks. Competition. The semiconductor industry is highly competitive, with companies constantly vying for market share. Intense competition can put pressure on profit margins for companies within the SMH portfolio. Regulation. Government regulations aimed at controlling technology exports or intellectual property can impact the semiconductor industry and potentially harm companies within the ETF. Question 8. Does SMH ETF contribute to portfolio diversification? The SMH ETF can contribute to portfolio diversification, but with limitations due to its concentrated nature. Here's a breakdown of how SMH can influence diversification. Potential benefits. Industry exposure. SMH offers targeted exposure to the semiconductor industry, a key driver of technological advancements. This provides diversification benefits if your portfolio lacks exposure to this specific sector. By adding SMH, you'd be adding a new asset class with potentially different risk-return characteristics compared to your existing holdings. Limitations to consider. Limited diversification. While SMH adds a new sector, it doesn't offer broad diversification. A truly diversified portfolio would ideally encompass multiple sectors and asset classes, stocks, bonds, real estate, etc., to spread risk across different areas of the market. Amplified sector risks. Adding SMH increases your portfolio's concentration in the semiconductor industry. This amplifies the impact of industry-specific events on your overall portfolio performance. A downturn in semiconductors could have a more significant negative impact compared to a broader diversification strategy. Alternative diversification strategies. Broader market ETFs. Consider ETFs that track broader market indices, such as the SP 500 or the total stock market. These offer exposure to a wider range of companies and sectors, providing more balanced diversification. Multi-asset class ETFs. Explore ETFs that invest across various asset classes, like stocks, bonds, and real estate. This strategy can further diversify your portfolio and potentially reduce overall portfolio volatility. Question 9. Are there other ETFs with similar objectives of SMH ETF, but lower expense ratios? Yes, there are several ETFs that offer similar objectives to the SMH ETF, exposure to the semiconductor industry, but come with lower expense ratios. Here's a comparison. SMH ETF. Expense ratio, 0, 35%. Focus, tracks the MVIS US listed Semiconductor 25 Index, or MVIS US listed Semiconductor 10% capped ESG Index in some regions, providing exposure to 25 of the largest and most liquid, easily tradable, US listed companies in the semiconductor industry. ETFs with lower expense ratios. iShares Semiconductor ETF, SOXX. O expense ratio, 0, 35%, same as SMH. O focus, tracks the PHLX Semiconductor Sector Index, offering exposure to a broader range of U.S. and non-U.S. companies involved in semiconductor manufacturing and equipment. DanX Semiconductor UCITS ETF, SEMB. O expense ratio, 0, 22%, lower than SMH. O focus, tracks the MVIS Global Listed Semiconductor Index, providing exposure to semiconductor companies listed globally, including the US, China, Taiwan, and South Korea. SPDR SP Semiconductor ETF, XSD. O expense ratio, 0, 35%, same as SMH. O focus, tracks the SP Semiconductor Select Industry Index, offering exposure to U.S. companies involved in the design, manufacture, and sale of semiconductors and related technologies. Question 10. Could a combination of individual stocks or other ETFs achieve a similar outcome with potentially lower costs or greater control? Yes, a combination of individual stocks or other ETFs could potentially achieve a similar outcome to the SMH ETF, with both potential advantages and disadvantages to consider. Similar outcome. Industry exposure. By strategically choosing individual stocks or other ETFs, you can achieve targeted exposure to the semiconductor industry, similar to the SMH ETF. Potential advantages. Lower costs. By carefully selecting individual stocks with lower expense ratios compared to the SMH ETF's 0. 35% expense ratio, you could potentially achieve similar returns at a lower overall cost. Greater control. Choosing individual stocks allows for greater control over your portfolio composition. You can select specific companies within the semiconductor industry that align with your investment thesis. Diversification. You can combine the semiconductor exposure with holdings in other sectors or asset classes through other ETFs, achieving a more diversified portfolio compared to the sector-specific SMH ETF. Potential disadvantages. Higher risk. Picking individual stocks inherently carries more risk compared to a diversified ETF. The performance of your portfolio will be highly dependent on the chosen company's success. Time commitment. Researching and selecting individual stocks requires significant time and effort. You'll need to stay updated on company news and industry trends to make informed decisions. Rebalancing complexity. Maintaining the desired portfolio allocation across multiple stocks or ETFs can be challenging. Rebalancing might require frequent buying and selling, potentially incurring transaction costs. Alternative ETF combinations. Here are some ETF combinations that could achieve similar exposure to the SMH ETF, with potentially lower costs and broader diversification. Semiconductor ETF e.g., SOXX, XSD, plus Technology ETF e.g., DGT, QQQ. This combination provides targeted exposure to the semiconductor industry while also incorporating broader technology sector holdings. Semiconductor ETF e.g., SOXX, SEMB, plus Global Technology ETF e.g., IXC. This combination offers exposure to semiconductors along with a broader range of technology companies across the globe. Question 11. What are the pros and cons of this SMH ETF compared to similar options? Here's a breakdown of the pros and cons of the SMH ETF compared to similar options. SMH ETF. Pros. Targeted exposure. SMH offers a concentrated way to gain exposure to the U.S. semiconductor industry through a single investment. This can be beneficial if you believe the semiconductor industry has strong growth potential. Liquidity. Being a well-established ETF, SMH offers high liquidity, meaning you can easily buy and sell shares on an exchange. Brand recognition. VanEck, the issuer of SMH, is a reputable investment firm, potentially offering some investors peace of mind. 2 flavors. In some regions, SMH comes in 2 versions. The standard version tracks the MVIS US-listed Semiconductor 25 index, and the ESG version tracks the MVIS US-listed Semiconductor 10% capped ESG index, catering to investors who prioritize environmental, social, and governance factors. Cons. Higher expense ratio. Compared to some similar ETFs, e.g., SEMB at 0.22%, SMH has a higher expense ratio of 0.35%. These seemingly small expense ratio differences can eat into returns over time. Limited diversification. SMH focuses solely on the U.S. semiconductor industry, lacking the diversification benefits of broader ETFs. This makes it more susceptible to downturns specific to the sector or the U.S. market. Concentration risk. By holding only 25 companies, standard version, SMH amplifies the impact of any single company's performance on the overall ETF price. Similar options. Pros. Lower expense ratios. Several ETFs like SEMB, 0.22%, offer similar exposure but with lower fees, potentially leading to higher returns over time. Broader diversification. Some alternatives, SOXX, SEMB, offer exposure to a wider range of semiconductor companies, including those outside the U.S. This can provide diversification benefits and potentially reduce risk. Global exposure. Some options ETFs like SEMB offer exposure to companies across the globe, potentially mitigating the risk associated with a single geographic region. Cons. Less liquidity. Some alternative ETFs might have lower trading volume compared to SMH, making it slightly less easy to buy and sell shares. Less brand recognition. Issuers of some alternative ETFs might be less well-known than VanEck, potentially a concern for some investors. No ESG option. Some options, not all similar ETFs offer an ESG-focused option like the SMH ESG version. Choosing the right option. The best option for you depends on your investment goals and risk tolerance. Consider the following. Cost sensitivity. If expense ratios are a major concern, prioritize ETFs with lower fees. Diversification needs. If you value diversification, consider broader semiconductor ETFs or combinations with technology ETFs. Geographic preferences. Choose between US-focused, SMH, or globally exposed, SEMB, options depending on your investment thesis. ESG preferences. If incorporating ESG factors is important, choose the SMH ESG version or explore similar options with an ESG focus. Question 12. What are the potential benefits and drawbacks of investing in SMH ETF compared to individual stocks within the same sector? SMH ETF versus individual semiconductor stocks, weighing the pros and cons. Investing in the SMH ETF offers a convenient way to gain exposure to the semiconductor industry, but it comes with limitations. Here's a breakdown of the pros and cons compared to picking individual semiconductor stocks. SMH ETF pros. Diversification. Although focused on semiconductors, SMH holds 25 of the largest and most liquid U.S. companies in the sector, offering some level of diversification compared to a single stock. Lower management effort. The ETF is passively managed, eliminating the need for constant research and analysis of individual companies within the industry. Liquidity. SMH is a well-established ETF with high trading volume, making it easy to buy and sell shares. Lower transaction costs. Purchasing a single ETF share might be more cost-effective than buying shares of multiple companies. Rebalancing convenience. The ETF rebalances periodically to maintain its target index weighting, eliminating the need for you to manage individual holdings. SMH ETF cons. Limited control. You have no control over the specific companies held within the ETF. The index selection and weighting are predetermined. Higher expense ratio. The SMH ETF charges an expense ratio of 0.35%, which eats into your returns. Limited diversification. Compared to broader market, while holding 25 companies offers some diversification, it's still less diversified than a portfolio containing multiple sectors or asset classes. Average performance. The ETF's performance mirrors the underlying index, which might underperform if specific high-growth stocks within the sector are not included in significant weightings. Individual semiconductor stocks, pros. Higher potential returns. By carefully selecting high-growth potential stocks, you could potentially outperform the average performance of the semiconductor industry as reflected in the SMH ETF. Greater control. You have complete control over which companies you invest in, allowing you to tailor your portfolio to your investment thesis. Potentially lower overall costs. Depending on your trading frequency, individual stock purchases might have lower fees compared to the ongoing expense ratio of the ETF. Individual semiconductor stocks, cons. Higher risk. Picking individual stocks inherently carries more risk. The performance of your portfolio will be highly dependent on the chosen company's success. Higher management time. Researching and selecting individual stocks requires significant time and effort. You'll need to stay updated on company news and industry trends to make informed decisions. Potential for emotional investing. Individual stock selection can be susceptible to emotional biases, leading to impulsive decisions. Rebalancing complexity. Maintaining your desired portfolio allocation across multiple stocks can be challenging. Rebalancing might require frequent buying and selling, potentially incurring transaction costs. Ultimately, the decision depends on your risk tolerance and investment goals. If you're interested in learning more about building a diversified portfolio that might include the SMH ETF or exploring similar ETFs and individual stock options, leave a comment below and let us know what you'd like to see next. Don't forget to like this video, subscribe to the channel for more in-depth ETF explorations, and hit the notification bell so you never miss an upload. Thanks for joining us, and we'll see you on the next one.